Hi, this is Steve Nison, and welcome to our next edition of Highlights, your free educational news resource for the candlechart.com family, what we call Candle Charters. In one of the issues of Highlights, we had discussed and for those familiar with the candles, you certainly know this, getting the jump on your competition as shown on the header. And this happens to be of Apple, and we talked about, and you'll see why I'm repeating a prior issue of Highlights, because we're going to go to the next step. The market had what's called an island top. The market gapped up and then gapped down, and with an island top, you get a reversal signal with traditional Western technicals, and an island top is traditional Western technicals when the market gaps down. So your potential reversal signal would have been here at around $92. But as shown by the arrow, we got early reversal signals at this red arrow here with the doji. Remember, the doji is telling us the market's tired. And then we had a resistance area shown by this red horizontal line at around $96. And then we got actually the bearish confirmation of a candlestick signal, a la the bearish engulfing pattern, the black candle wrapping around the white candle at a resistance area. So by using the candles, we got a reversal signal at around $95 rather than at $92. So we would have gotten a sell entry, either sell short signal, $3 higher, or a signal to exit long positions or lighten up on long positions. So we would have gotten a reversal signal at least $3 higher. And the reversal signal would be either to exit long positions or to sell short. Again, the value of the candles with those early reversals. But let me show you something interesting. This slide ended in early February, so the market continued down. Essentially, let's say we sold here at $95. It continued down. No real reversal signals with the candles. Doji, by the way, worked better at calling tops than bottoms. Okay, so although there was a doji and a downtrend, there were no reversal signals with the candles until we got, and let me show you these numbers here. We'll go through these. This was the doji we talked about before. Then this was the bearish engulfing pattern here at 2. And the prior slide ended in early February. Interestingly, look what we got as time progressed. We got a hammer. So the first sign that the bears were losing steam was with the hammer. So if you happen to have sold here, say at 95, the first time or the first signal we would have had to really cover shorts would have been here on this hammer at $85. You would have made $10 profit per share. But let me continue on with the idea of getting the jump on your competition. So we got a jump on the competition with this bearish engulfing pattern ahead of, in other words, the reversal signal here with the bearish engulfing pattern ahead of the island top signal, which would have been here. But another way to get a jump on the competition for those who use daily charts is to think about using intraday charts. And by the way, if you have any questions, contact Paul. He's our new director of business development, so that's what this contact information is all about down here. But getting back to the candles here, for those who use daily charts, you can think about using intraday charts to get early reversals, because one of the limitations with candlesticks is you need open, high, low, and close, right? So you have to wait for a close. But nothing says you have to wait for the close of a daily session. Why not wait for a close of an intraday session? And I'll show you what I mean. So here at 3, we have a hammer, candlestick with a very long lower shadow, small real body at the top end of the trading range. The hammer should become a support area, as indeed it did. And at 4, there were no reversal signals here. This is not, for those familiar with the candles, this is not a piercing pattern. So there were no bullish reversal signals on this daily chart. But let me show you something interesting. This happens to be February 28th on this white candle. Although there were no reversal signals here on a daily chart, let me convert it to an intraday chart. So here we have both a daily chart and an hourly chart. Now, this was the hammer I talked about before. The hammer was a support area. This is February 28th on the daily chart, no reversal signals. Okay, and this is also February 28th on an hourly chart. And notice what we had. We had the white candle wrapping around the black real body, following a downtrend. That's a classic bullish engulfing pattern. So essentially, by using the power of intraday candlestick charts, we got an early reversal signal ahead of those who only normally use daily charts. So we would have gotten the potential buy signal at around $85 based on the hourly chart, and notice there were no reversal signals here at all on the daily chart. So the thrust of this is that, first, that the candles obviously will give you those early reversal signals ahead of those who use traditional Western tools. And then secondly, using intraday candlestick charts is also a great weapon to give you even early reversal signals compared to those who only use daily charts. And thanks for watching this, and hopefully this will expand your knowledge of candlesticks, and we'll continue doing these highlights from time to time. May the candles continue lighting your path to greater profits.